I'm Owen Bigland. This is the Inside Edge video blog. This is a quick follow-up blog, a quick reminder here to a blog I did about a month and a half ago. And it's this, short and sweet. I'm advising people to stay away from pre-sale condos until further notice. Now I'm mostly talking here about Vancouver, Richmond. I don't really follow the markets in the Fraser Valley all that closely, but I'm talking right now mostly about Vancouver. And just quickly, it's what I've already talked about before. I just do not see really, there's no incentive here at all to buy a pre-sale condo. Now, first off, there's not a lot of pre-sales going on right now, nor do I see a lot of pre-sales getting ready to be sold over the next 5 to 6 months. I think there is going to be another wave of condos going on pre-sale towards the end of 2018. These won't be completed until 2021, 2022, a long way away. But for now, avoid them. Because in a quick synopsis here, you are paying, in my opinion, a 15 to 20% premium for the luxury of that layaway program. So in other words, to buy a pre-sale, remember, when you're going in and buying a pre-sale, the deal is only as good as what else is out there in the tangible market. So you've got to be, first off, crazy to buy a pre-sale condo unless you have first gone out with a realtor and had a look at tangible product. Now, mind you, inventory continues to be ultra low on Vancouver condos. We'll see what the future brings here. But you should never put your money down on a deposit on a pre-sale until you've actually shopped around a little bit and seen what that $700,000 or $800,000 can buy you today on tangible product. And it doesn't have to be old. It could be a unit that's a year old or 2 years old, still under warranty. So in my opinion, you're paying at least a 15% premium for the luxury of being shiny and new and the layaway program. A lot of people like that. They put 5% down today, another 6 months later, another 5% down. They don't have to, they make the payments over a course of 2 years, and you don't move into it for 3 years. So you're paying that premium, that 15%, and keep in mind you're also paying GST on top of that, another 5%. So let's think about it. You buy it today. In my opinion, between now and the time you get the keys on that in 3 years, you need that unit to appreciate by at least 20%, maybe a bit more, because if you sell it, you're going to have to pay real estate commissions. You've got PTT going in, conveyance fees. We'll keep it simple though. You're going to need that unit to increase from this point, which is already record-setting prices on condos. You're going to need that to increase another 20% just to break even on the unit. And that is a tall order. I mean, let's face it, interest rates are starting to creep up here a little bit. I am starting in some ways, and I'll blog more about this fall or winter. Maybe we are starting to see a little bit of buyer fatigue on the condo market. It's still an ultra hot market. There are still multiple buyers for most units, but what I am seeing early stages of, instead of getting 5 and 6 offers, maybe I'm only getting 3 or 4 offers now. And that's usually the first sign. It's early yet. So my advice would be to stay away from pre-sales for now. Now, listen, if it's a special building and you really want to get into that neighborhood and you've got a long-term need, meaning that you're not going to sell this thing after you complete on it and you're going to keep it for 10 or 15 years. My rule of thumb is always 8 to 10. Well, I think with a pre-sale now, I'm bumping that up definitely to 10 or 12 now, that you've got to be able to keep it because you're paying that 20% premium right off the bat. So I would be careful in buying a pre-sale right now, and I would avoid it until further notice. The markets, these windows for pre-sales, as I blogged about before, they open and close. And I think it's been closed for over a year now, in my opinion. The last opening was about 24 months ago. And I'll just show you how crazy this market is. Back in October of 2015, so 2 years ago, a little over 2 years ago, I blogged about, I bought several and brought clients in on several others, 1-bedroom units in Olympic Village. These were 505 square feet, no parking, brand new building for $368,000. Those units are now selling for $550,000. Am I selling them? No, I've got good tenants in them. I'm keeping them. But that's getting up to be a pretty rich price now. And it shows you how much this market has gone up the last couple of years. Now I see pre-sales I blogged in the Mount Pleasant area, not very desirable locations, selling at $1,100, $1,200, $1,300 a square feet for Mount Pleasant. That's getting ahead of itself, in my opinion. Not a lot of incentive there to buy, and you're really going to need those prices to continue on a tear here just to be above water when you get the keys on it. And remember too, pre-sales, I've blogged about this in the past too, how crazy the pre-sale market is. You know, 10 or 12 years ago when I was buying pre-sales, there was an incentive there. You were actually buying the pre-sale at 10 or 15% below what tangible product was at, for good reason. You were buying it off a brochure. You had no real idea of what you were going to get until the building was built. You had no idea what the parking space was going to look like, the finishings really. They'd have a display suite, but it didn't give you any idea really of what the actual finished product was going to be. So the developers gave you a nice discount on that. But as I blogged about before, that all changed about 10 years ago. And I don't begrudge the developers for doing this, but they decided, let's start charging market or even above tangible price and see if we can get people to still take these on and not be able to move into them for 3 years. And it worked. Now, it's good when the market continues to go up 10 or 15 or 20% a year. But I would say we're in the late innings of that game now. And I think you'd be taking a pretty good chance, pretty big risk by paying a premium today for something you're not going to be moving into on 3 years. You know, the other thing too, it's been in the news lately. Back 10 years ago, if you wanted to buy a pre-sale and assign it, because I was buying assignments from my own portfolio where people had bought them a year prior or 2 years prior, and then I was coming in and buying them as an assignment, paying them what we call the lift, which is the profit they were going to make, $50,000, $60,000, $70,000, whatever. You know, back then, the developer would charge these sellers $500 conveyance charge to transfer the original contract to the new buyer. It was like an administration fee. About 5 years ago, the developers thought, hey, we want a piece of this too. We're going to start charging a $3,000 or a $5,000 flat fee to assign one of these. Now, if you saw, there's a big Vancouver developer now that is now going to charge 25% of any profit of the assignment. Hey, I don't blame them. They might as well try and get a piece of it. If the guy's making 100 grand on a flip on an assignment, the developer wants 25,000 of that. Why not? So it's getting crazy now. The days have totally changed on how pre-sales are sold and bought and how they can be assigned. So until further notice, I would suggest people stay away from the pre-sale. I think it's just not worth the price you're paying. There's better stuff out there. That's what I'm trying to tell you. I can get you a better product, a better unit, better location for less money with tangible product. And nobody should be buying a pre-sale unless you've shopped around and look what's out there. Because let's face it, a deal is only as good as what the competition is offering. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.